You hear it all the time. America is drowning in debt. The national debt is a huge talking point, right? But what if I told you there's another economic giant with a debt situation that, in some ways, makes the US look almost conservative? Let's talk about China. Now, that headline-grabbing claim, China's debt problem is 300% bigger than America's. What does that even mean? It's not as simple as comparing one big number to another. We have to look at the total debt that includes government, corporate, and household debt and compare it to the size of the economy, the GDP. Let's break it down. America's total debt-to-GDP ratio is around 280%. That's high, no doubt. But China, their total debt-to-GDP ratio has surged past 330%. So, it's not a direct 300% bigger number. But the scale of the debt relative to their economic output is significantly larger. And the speed at which it grew is what really raises eyebrows. So where is all this debt coming from in China? A huge chunk of it is corporate debt, especially from state-owned enterprises. After the 2008 financial crisis, China unleashed a massive stimulus package. They built cities, high-speed rail, and airports at an incredible pace. To fund this, companies and local governments borrowed a lot. Think about it. They built infrastructure that was meant to support decades of future growth, all within a few years. The debt was taken on now, but the economic payoff is spread out over a long time. This leads us to the real estate sector, the engine of China's growth for decades. Companies like Evergrande became household names for all the wrong reasons. They borrowed billions to build vast housing complexes. The problem is, many of these were built on speculation. People bought apartments not to live in, but as investments, betting prices would always go up. This created a massive bubble. When the government decided to crack down on this excessive borrowing to prevent a total collapse, the bubble started to leak. Now, we see unfinished projects, falling property values, and developers struggling to pay back their loans. This has a ripple effect. If people's main source of wealth, their properties, losing value, they stop spending. That's a huge problem for an economy trying to shift towards consumer spending. So, how does this compare to the US? American debt is different. A large portion is government debt, the national debt we hear so much about. The US dollar, being the world's reserve currency, gives America a unique advantage. It can print more money and other countries are still willing to buy its debt. China doesn't have that luxury with its currency, the yuan. Also, a lot of US household debt is in mortgages for homes people actually live in, not just speculative assets. But here's the crucial difference. In China, the financial system is state-controlled. The biggest banks are owned by the government, and so are many of the biggest banks. This means the government can, in theory, manage the problem. They can tell banks to restructure loans, forgive debt, or keep lending to prevent a sudden crash. It's like a family dispute where the parents can step in and force everyone to play nice. In the US, a crisis at one private bank could trigger a domino effect across the whole free market system, like we saw in 2008. China's approach avoids a sudden, sharp crisis but creates what some call a zombie economy. Companies that should fail are kept alive by constant loans, which drags down overall economic efficiency and growth. They're kicking the can down a very long road, and that road is getting bumpier. The slowdown in China's growth rate is a direct consequence. The old model of building and borrowing is no longer working. So, is China's debt bomb about to explode? Probably not in a dramatic Lehman Brothers-style implosion. The government's control is too tight for that, but it's more like a slow deflation. The economy faces years of sluggish growth, a struggling property market, and a difficult transition to a new economic model. This long dull crisis has huge implications, not just for China, but for the entire global economy that relies on its growth. The next time you hear about its debt, remember to look across the Pacific. The story there is just as important and far more complex than a single headline can capture. Thanks for watching. If you found this breakdown helpful, give this video a like and subscribe for more deep dives into the global economy. See you next time.